Trading's Todd Horowitz, the Fitzgerald Group's Keith Fitz-Gerald, and Courtney Dominguez from Payne Capital Management. It's spelled the same, but I'm not affiliated with that organization. All right, y'all, a lot of moving parts here. I don't know, maybe the Fed, it hikes rates next year. But here's the thing. If they hike in late 2022, 2023, when it really comes down to, Todd, why so much hand-wringing over this? Why is it a big deal?
Well, I think that everybody's gotten used to the free money, Charles, or not free money, but cheap money. And of course, what we really forget is that the upper 1% is the ones who really get to take advantage of this inexpensive money that you can borrow for 2% or 2.5% and refinance and take that money and put it in the market because, of course, that returns more as a rule. So you've got a mixed up Fed that has no understanding that the interest rate market can bear higher rates, and if you let them trade, they can trade.
So but my question also, though, Courtney, is why can't the stock market? I mean, why should we even have a taper tantrum? I mean, we're talking about an eventual rate hike in late 2022, perhaps 2023. And if I read Jay Powell right, maybe 2024. Why would we go through all this angst and confusion right now in the market?
Yeah, and the markets and traders are really going to be leaning on everything the Fed is saying right now, because I don't think it's really as important as when they're going to raise rates or how much they're going to raise rates, or if it's faster or sooner than everybody expects it to be, because that's what will create some sort of taper tantrum. We even saw that back in February, that interest rates spiked ever so slightly, and we really saw like the NASDAQ sold off on that. So I think it's just really going to be important that they are transparent when it happens. Sorry, go ahead.
That was a huge percentage move, though, right? I mean, we went that was like a huge gargantuan gusher. The number itself wasn't big, but, Keith, that was a big move. Ironically, today, yields are pulling back. I mean, everything other than the stock market, and even now the S&P starting to come up with the NASDAQ, is saying, hey, things are cool. Again, I don't know how you can be a successful investor, even trader, and be so concerned about what the Fed may do 2 years from now. Eventually, they will hike rates.
I am absolutely with you. They might as well break out the magic 8-ball because the Fed is going to do what the Fed is going to do. So as an investor or a trader, you got to focus on what you need to do. To me, there's plenty of profits. There's great fundamentals. There's lots of great companies out there. And that is where you need to focus no matter what Jay Powell says next.
All right, so Todd, what are you doing now? What are you doing with respect? Did you make any changes based on what we heard from the Fed yesterday in your portfolio?
Charles, I never react to the Fed. I react to the tape, and I react to price action. And, we're kind of mixed, but basically net long the market's here, and we'll stay there until the overall trend changes. You have to remember one thing, the markets are going to go up until they don't. And I'm not going to worry what Jay Powell says. I just find it irritating that they run a ridiculous policy. But overall, we're going to stay long these markets because there's no reason to believe at this point they're going down. So why not continue to stay with what is winning, and that is staying long the market and you're playing stronger fundamentals, which makes sense.
All right, I'm going to talk to you about that. I'm going to get more granular, though. We know the market is doing well, but this year it's sloshed around. Any given period, one group was down 5%, another was up. And to that point, Courtney, supposedly the blueprint or the script says in this environment, you want to own financials, you want to own small caps. I also want to ask you about the strong dollar because I know you like that emerging markets trade. Are all those buys in your mind?
They are, yeah, very much so. And I think we're going to get these ebbs and flows. So I wouldn't look at like 1 week or another as a complete trend change. But I think you really want to look at your cyclicals right now. So things like your small caps, your financials are really going to benefit as they're more sensitive to the economy continuing to grow. My only caveat there is I would still, like if you're looking at small caps, look at your value over your growth, because your growth companies are still going to be more sensitive to interest rates rising. But also your foreign companies, whether it's emerging or your domestic markets, are more cyclical. So I do still really like all of those trades right now.
Keith, I know you had some really amazing wins in the growth area in some of these tech names. I'm looking at these secondary tech names, systems, software as a systems, solution things, SaaS, and some of the others. They're rocking today. I mean, where are you really focused right now?
Well, I'm focused on a lot of the names that you and I've talked about, and thank you for remembering that. It's a tough business to get one right, let alone a few of them. I'm looking again at Palantir. This is a company that's finally on the move. It makes the engine for big data, and I think it's totally underestimated. NVIDIA is interesting to me. It's obviously on a very sharp move higher today. I think the real action is going to be after the split. So the companies that are growing, digitalization, that's where I want to be. This isn't a trend that's going away anytime soon. In fact, it's getting stronger, and there's trillions of dollars that are going to get spent. Again, no matter what the Fed does, no matter who's in the office, go for it.
We've got a screen up with Amazon crushing it. Advanced Micro through the roof. By the way, with this bipartisan infrastructure deal, U.S. chip companies will get tax credits for investments. That's going to also probably give them some win. Let's shift again. Let's shift out of this then, right? Okay, and I agree with you, Todd. Too much emphasis on the Fed. That's why I brought it up, because I think it is a little bit ridiculous. Let's talk about something that I think always works. Good old-fashioned fundamentals, particularly strong earnings. What names do you think, based on fundamentals, right? I know you said the market. Okay, we're with you. We're in equities. But what area probably outperforms at this point?
Well, I think tech continues to go bananas, as Keith said. I mean, you've got a lot of action in stocks like Palantir and Box and DocuSign. But let's not forget the old standby Apple, who I believe at some point is going to make a major acquisition that will actually bring them in some reoccurring revenue, which I should think they should have done years ago with Netflix when they had the chance to buy them. So I think the basic tech is going to be very strong, as well as a lot of the new tech, or the storage and things like that, because that's what we're seeing, and that's what the demand is for by the street. And those are fundamentally very strong companies.
They are absolutely on fire. Last year they obviously did extraordinarily well, outperforming the broad markets. And some of them aren't even profitable yet, but they're really on pace to be profitable quickly. Courtney, I want to give you the last word. Just your thoughts on the last 24 hours, what we've seen, what the market is saying, and you seem to still be comfortable with where you've been for the last several months, so you're not making any changes. What should investors know?
Yeah, and I think that being said, you need to make sure you're well diversified. I do still like things like your tech firms, but it's just really not where I'm looking for opportunity right now. There's still a lot of places that are recovering and making their way. Like take, for example, things like airlines or Delta are really coming back strong as people are starting to travel again, but they still have a lot of potential to go here. And I think you really still want to look at those cyclicals, look at those values, own a little bit of all of it, but that's really where you got to play this right now.
All right. Courtney, Keith, Bubba, thank you all very much. Appreciate it. Well,